This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The world oil market will be comfortably supplied in 2025, the International Energy Agency, IEA, said on Thursday, even after producer group OPEC Plus extended oil supply cuts and a slightly higher than expected demand forecast. The outlook from the IEA, which advises industrialized countries, points to continued headwinds for OPEC Plus. It is seeking to begin reviving output in 2025 after years of cuts. Oil demand growth has been weaker than expected this year in large part because of China. After driving rises in oil consumption for years, economic challenges and a shift towards electric vehicles are tempering oil growth prospects in the world's second-largest consumer.
Oil prices were little changed on Thursday as forecasts of weak demand and a higher-than-expected rise in U.S. gasoline and distillate inventories placed a lid on gains from an additional round of EU sanctions threatening Russian oil flows. Brent crude futures were up 31 cents at $73.83 a barrel at 0815 GMT. U.S. West Texas Intermediate crude futures rose 22 cents to $70.51. Both benchmarks rose by more than $1 on Wednesday. OPEC cut its demand growth forecasts for 2025 for the fifth straight month on Wednesday and by the largest amount yet.
Moving on to the top news in the energy sector.
Saudi Arabia's crude oil supply to China is set to rebound to a three-month high in January, trade sources said on Thursday, thanks to price cuts by the world's top exporter amid uncertainty over Iranian supplies. State oil firm Saudi Aramco will ship about 46 million barrels in January to China, a tally of allocations to Chinese refiners showed, the highest volume since October and up from December's 36.5 million barrels. China's state majors Sinopec, PetroChina will be lifting more Saudi crude in January, and non-state-owned refiners Rongsheng Petrochemical and Shenghong Petrochemical will also increase lifting, the sources said, speaking on condition of anonymity.
The U.S. solar industry unveiled its lobbying strategy for the incoming Trump administration on Thursday, promoting itself as a domestic jobs engine that can help meet soaring power demand, without referencing its role in combating climate change. The policy agenda marks a stark shift in tone for the solar sector, which is a major beneficiary of subsidies contained in outgoing President Joe Biden's landmark 2022 climate change law, the Inflation Reduction Act, IRA. President-elect Donald Trump has vowed to rescind the law, something that would require action by Congress. Next, we have the top news in metal markets. Iron ore futures prices rebounded from the previous session's losses on Thursday, as investors awaited clues on policy easing from a key economic meeting in top consumer China. The most traded January iron ore contract on China's Dalian Commodity Exchange, DCE, ended daytime trade 0.86% higher at 818 yuan and 50 fen, $112.68, a metric ton. The benchmark January iron ore on the Singapore exchange was 1.36% higher at $106 a ton, as of 0710 GMT. Iron ore prices remained steady as traders weighed the impact of additional stimulus from China and easing monetary policy against other structural headwinds, ANZ analysts said.
India will reach a decision soon on whether to impose import restrictions on metallurgical coke, a key ingredient in steelmaking, a source with direct knowledge of the matter told Reuters. India, the world's second-largest producer of crude steel, proposed a plan in April to protect local suppliers of low-ash metallurgical coke by imposing country-specific quotas to limit annual imports to 2.85 million metric tons for 1 year. Leading steelmakers such as JSW Steel and ArcelorMittal Nippon Steel opposed the move, saying it would hit output, and the government has been consulting with the industry.
We will now look at the top news in the agricultural sector.
India's vegetable oil imports surged to a 4-month high in November as refiners ramped up purchases of soy oil and sunflower oil, replenishing inventories after robust festival season demand, a leading trade body said on Thursday. The country's vegetable oil imports in November rose to 1.63 million metric tons, up 10.4% from a month ago, the Solvent Extractors Association of India said in a statement. The world's biggest edible oil importer celebrated the Dussehra and Diwali festivals in October and November, increasing the consumption of sweets and fried food.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.